Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst with Red Cloud Securities. I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We will hear from Rob Van Drunen, Chief Operating Officer of Flying Nickel Mining Corporation. During today's webinar, he will provide an overview and outlook. Then we will take questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Flying Nickel webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of the Flying Nickel corporate presentation. That can be found on the company's website, flyingnickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Flying Nickel. So nickel has long been largely used by the steel industry, but there is a significant growing need for nickel for batteries, particularly for electric vehicles. Recent geopolitical events have further highlighted the need for nickel production from North America. In addition, there's a growing concern about the environmental impact, including the carbon footprint of metals production. And many companies that use metals, such as nickel, are looking for production from projects that have a lower carbon footprint. So we have Flying Nickel presenting today. The company is focused on the development of its Minago nickel project located in the Thompson nickel belt in friendly Manitoba. With that, I now turn it over to Rob to update our audience on the company.
Thank you very much, Tim. Just a little bit about myself. I am based in Thompson, Manitoba. I have an over 30-year career with Vale and Inco in the nickel mining industry. I jumped on board with this project last September with Flying Nickel, and my goal is to bring this one forward. It's a very interesting project. It's almost in my backyard, literally. I'm still in Thompson. The project is a couple hours south of me, and I've been looking at this for quite a while because the Thompson nickel belt has a lot of history, and this particular project, of course, is one that's come to the forefront. Forward-looking statements, as Tim has described already, there's a lot of statements in here that are without limitations regarding future plans and objectives of the company, and of course, you can read this on our website as you wish. A little bit about the project. This is a Minago nickel sulphide project in the Thompson nickel belt. It's a very prolific nickel camp. It's the #2 nickel camp based on the fact that it's produced over 5 billion pounds since 1959. Now, of course, #1 is Sudbury, and the #3 camp in Canada is Voisey's Bay area. Our particular nickel resource is at 0.74% grade. We have over 721 million pounds of both inferred as well as overall 1 billion pounds. So we have 1 kilometer to paved highway, and 230 kilovolt line runs right beside it. There's a river right near it. We have water, we have power, we have logistics right beside the mine. It has an environmental act license with an updated feasibility study that is going to be completed by November of this year in 2022. It's a very historic project. It's had a lot of exploration over the past 50 years, beginning with AMAX in 1966. And of course, with us now in January, we spun out as Flying Nickel, and we're trading on the LME right and the TSXV right now as of March. A little bit about the resource. We have a very large resource. There's of the other projects in Canada that have over 1 billion pounds of nickel resource, we have the highest grade of all of our comparable peers in the industry. Between Nickel Shaw, Dumont, Crawford, Turnagain, North Met, we have over 0.74% grade in our latest MRE. In that, we have 84% of the resources are in the nose deposit, which is based on the current feasibility study for where we want to place the mine. There is an additional North Limb deposit where 16% of the resource is sitting, and we plan to do further exploration in that area, and that's the upside on the particular project with regards to the resource right now. A little bit about the company. Flying Nickel is a new company that started in January 14th, 2022. It spun out from Silver Elephant Mining Corporation, which had purchased the Minago project earlier in 2021. It's raised $8.6 million in December 2021, and it's fully funded for the 2022 period. Of that, there was 62 million common shares, 73 million of them are fully diluted. 23 million are held by Battery Metal Royalties Company, 17 million by Blackstone, as well as some funds and insiders. There is 11 million warrants and options outstanding. And just a note there that on the TSXV, FLYN started trading on March 4th of 2022. So our current capital structure right now, given the fact that at the fair share price of 39 cents, with 12 million shares issued from December, and the 62 million outstanding, it's got a market cap of around 24 million. What this does is it really provides some great investor value. And how do we get that value? Realistically, with 85,000 meters of diamond drilling, it would cost about $34 million to end up with that amount of drilling. The technical reports, metallurgical studies that have already been done on the projects worth about $2 million. Geological surveys, Environment Act licenses, baseline studies, and G&A. We're looking at over $53 million to get a project to this point. So it's a pretty good investor value sitting right now. A little bit about the environment. One of the key pieces of this project that's unique is that it could potentially be among the world's lowest CO2 emission per pound of nickel produced. Of course, every mining company is announcing net carbon emission reductions. Barrick and Newmont are looking at zero net carbon by 2050 because of climate change initiatives. This project sits very well for GHG emissions. The Manitoba hydroelectric power, which is less than 1 kilometer away from Minago, has a 0.4 CO2 emission intensity, which is one of the lowest in the world. It's excellent power. Compared to other processes in the world, for instance, the laterites in Philippines and Indonesia use orders of magnitude more CO power and, of course, CO2 emissions with that. The proposed Minago open pit mine is ideally suited for an electric mine fleet due to that power, which is right beside the mine, and autonomous piloting, which will further reduce consumables and diesel emissions consumptions. And if you look on this chart over in the left-hand corner, you can see the emission intensity for Manitoba Hydro is extraordinarily low, even compared to overall in Canada at 0.4. That's a really good number for us, and we're looking forward to utilizing that on the site. We look at the nickel demand by sector. You're looking at a 21% per annum increase from 2020 all the way to 2030. The EV revolution is really looking at an order of magnitude increase in the demand for nickel between 2020 and 2030. It's huge. Look at the outlook here based on the forecasted rapid growth of EVs between 2025 and 2030. It's going to put some serious pressure on the nickel industry. There's a 2.2 billion pound deficit of class 1 nickel by 2030. And, you know, there is some differences between class 1, class 2 nickel. Class 2 nickel, is the stuff that you get coming from the laterites. It's a little different. Stainless steel usage and substitution recycling from China doesn't add the right kind of nickel for batteries. You have to have some type of nickel sulphide or some type of ferronickel production in order to get that type of class 1 nickel. So there's definitely a demand that's there. It's not going to be an up and down cycle. We're going to see the upside of nickel for quite a while now. A little bit about the people on the project. So one of the reasons that I joined the project is this is led by a group of very senior industry people. Dan Osterman, the CEO, who can't be with us here today, is a nickel industry veteran, actually started his career in Thompson at the T3 mine, helping explore for some of the resources at Vale Inco. He's got a 25-year experience specializing in exploration and has worked with Falconbridge, as well as managed multi-million-dollar drilling programs across all kinds of climates in northern Canada. He's our QP, as defined as on the NI 43101. Doug Ramsey, he's also on board. He's a very experienced environmental manager. He's got over 40 years in environmental assessment, permitting, and Indigenous consultations. He's got over 20 years in Manitoba, working with clients like Falconbridge, Inco, Environment Canada, Fisheries and Oceans, as well as very good involvement with the First Nations in Manitoba. Mark Scott, his 20-year career with Vale, is the former head of the Manitoba Vale operations, president and chair of Mining Association Manitoba. He's also CEO of Sassy Resources. He has a long career in nickel as well. Dave Gower, professional geology, is an advisor at the company. He's got 20 years of experience in nickel and exploration with Falconbridge. He's a former director of global nickel and PGM exploration. We've also got several other people who are involved in our project. Rob Smith is a former exploration manager at Vale and Inco and has been involved with our exploration program, which we just finished earlier in March, as well as Dr. Peter Lightfoot, who's the preeminent specialist in nickel sulphide ore bodies in Canada. So they're helping us with the exploration programs to drive the project forward as well. A little bit about the model. One of the unique things about this project is in the Thompson nickel belt, and we see similarities between the major discovery in Thompson and what we see in this particular discovery at Minago. The nickel sulfides have been remobilized into a low stress regime. There's a fold and there's noses here along with pressure shadows along the limbs. It's very similar to the T1 deposit in Thompson with the nose, as well as the T3 deposit occurring upon the north limb. And we can see those reflected in the similarities between the Minago deposit and the Thompson deposit. On top of that, the heat map that's used with magnetic imaging shows the project very well. It shows up very good on the heat map and gives us an opportunity to utilize those heat zones as further exploration targets. There's a lot of potential in the area. Thompson nickel belt is prolific for a reason. There's a lot of nickel in the area. Our project sits in a very small postage stamp of 192 kilometers square package. It's a big package. There are historical hits other than the main resource to the north, which is 66 meters at 0.52%, as well as to the south of 36.6 meters of 0.51% with a south target. Those have very limited drilling and are targets that we will explore in the future. The limbs and noses are demonstrable mineralization, and we plan to hit a lot of these mag exceptions that we see on the map to do some exploration drilling over the next couple of years. The district potential, with the 197 square kilometer package, it's a little postage stamp where we have the actual mineral resource. As you can see there in the very middle in the property boundary that's shaded in blue, our property is very large, and there's a lot of mag anomalies on the property that we will want to explore. And further to the right, you can see the proximity of the 230 kilovolt hydro line and Highway 6 as it actually crosses through the mineral lease claims on the property. A little bit on where we're at with the project status. The project was advanced to feasibility study level in 2010 by the previous operator and was licensed for a 10,000 ton per day open pit bulk mining operation. That's a really key item. It was licensed, and the license is still valid. We're working through getting that into the Flying Nickel name. That's a 7-year process that puts us far advanced along the trail of getting the project into actual production. The project was put on hold due to low nickel prices in 2011-2012 with the previous operator, and our company acquired the project in February of 2021. We did an updated mineral resource estimate in August of 2021 and established that the 2011 Environmental Act license is still in good standing, pending completion of a couple of requirements, which we're going through right now, and we expect to have the licenses and permits in our name by the end of Q2. little bit about the product. It's a very typical Thompson nickel belt concentrate that comes out of the process. The mill design is very typical of what you'd see in currently used in Thompson, or even in Sudbury for that matter. It's not a complicated process. It's very standard. So what we see is that there's lots of opportunity to optimize the process. In 2008, they did over 60 rougher and cleaner flotation tests on 5 metallurgical drill holes. What they found was, based on the lower 0.4 to 0.6% nickel feed and an output of between 18 and 34% recovery in concentrate, they ended up with a 52 to 58% nickel recovery. The grade of the project has been improved to 0.74 based on additional looks at the geology and removing some of the waste product. What that means is that we can extrapolate that we will be in the 60 to 70% range for nickel recovery using the same plant. And of course, there's always upside room for improvement and optimization of that when we do the feasibility update. A little bit about the destination. Where can this potentially go? There is a lot of extra capacity in the nickel market in Canada right now for producing refined nickel. Vale Sudbury Smelter, for example, has a 60 kiloton spare in 2020 compared to its overall capacity. Glencore Sudbury has a 35 kiloton spare, Vale Long Harbor 15, and Sherritt, of course, 16. So there's a lot of opportunity here for moving the concentrate through the refining process directly in Canada. Additionally, Jinchuan, as well as Bulletin and Norilsk, have capacity, and the product can be taken there as well. In addition, concentrates can potentially be used in certain battery processes, and we're looking at some of those types of off-takers right now through our process. So what does the timeline look like? So in 2011, of course, the 10,000 ton per day open pit mining operation was provided for Environmental Act license. We're in process of finishing up a notice of alteration to move the waste rock and tailings management facility to the northeast of the project, which alleviated some concerns from some of the First Nations groups in the area, as well as provided a better environmental storage for the tailings. We expect that to be finished in the Q2 of 2022. And we expect the completed feasibility study, which is an update from 2010-2011, by the end of November of this year. It is currently in process and ongoing. For First Nations engagement, we've already signed a memorandum of understanding with the key stakeholder in the area, the Norway House First Nation, who has the traditional management resource area right beside where Minago is, as well as the other 3 stakeholders in the area for First Nations. We have very, very good relations with them, and they're looking forward to the project as well. The nickel team we've got has over 115 years of experience. Myself, I'm based in Thompson, and I live in the nickel belt. So that's very helpful for me to help work with the government, First Nation stakeholders, as well as be on site for the project. So what we're really looking at here is that we'll have an environmental license and feasibility study completed in 2022. We're looking at project financing and construction between 2023 and 2025, with the earliest nickel commissioning and concentrate shipment by the end of 2026. That's the earliest timeline, and it is possible. What's our budget look like right now? So for 2022, we are fully funded. We have money in the budget here for some social and permitting. We're doing some core relog and modeling for $200,000. We did a diamond drilling program of almost 3,000 meters. We had planned 5,000. However, we didn't get the permits in time. We had an early ice breakup in the area, so we had to stop the program at that point. We're doing a feasibility update study, which is around $1.2 million. And we're looking at limestone road and power planning, as well as some waste planning for the project. That's about $500,000, and of course salaries and G&As around $2.5 million, for about $7.2 million total budget for this year. And that's about it for a very, very brief summary of the project. Look forward to some questions. Flying Nickel is, of course, FLYN on the TSXV. Looking forward to questions.
Great. Thank you very much, Rob, for a very informative presentation. We'll now start the Q&A portion of the webinar. Reminder to everyone on the line, you can type your questions into the chat box at any time. And we do have a couple of questions here. First, we just mentioned the feasibility study. One question is, who is doing the feasibility study, and what are you looking at to minimize your exposure to high fuel prices?
Yeah, very good question. So first of all, who's doing the feasibility study? We actually decided to go with a consortium of experts. We have Lycopodium, who's leading it, with AGP Mining, as well as Mercator and Trek Geotechnical out of Winnipeg to work on the environmental and the tailings dam. So that's who's doing it. How are we limiting our exposure to diesel fuel prices? Well, first of all, we're looking at electrifying the whole plant. So we're looking at doing trolley assist trucks. We're looking at electrifying our fleet, as well as working with the First Nations to help with the fuel supply on that as well. So there's a lot of interesting stuff going on in the feasibility study update that will help the project and de-risk it.
Great. And what steps remain? You had mentioned, I mean, in some ways it's fully permitted, but what steps remain in any final permitting that would allow construction?
So right now we're going through a notice of alteration that is yet to be approved with the government, and that was to alleviate some concerns. The original environmental permit had certain amounts of water from the site flowing south, which would have ended up in Lake Winnipeg, and there was concerns from some of the First Nations in the areas that could potentially impact fishing and some other traditional resource management stuff. So what we chose to do was move the tailings and management area to a larger basin within a limestone outcropping set, which is actually a much better idea. And with that notice of alteration is in process right now, and we expect it to be approved by end of Q2.
Okay, great. And one question about the kind of at a corporate level, you have some significant shareholders, including Blackstone Minerals. What is the relationship there? Are they just a passive shareholder, or are they potentially going to be more involved in the company and the project?
They're currently a passive shareholder. They don't have any control in the company. I don't know what it looks like in the future, whether or not they want to have more involvement. That's up to them and for us to discuss at some point in time in the future. Currently, they're a passive shareholder.
Okay, great. And one kind of general question here. Obviously, the project has a long history, was almost brought into production a decade ago. What has changed that makes this the time to advance the project?
Yeah, that's a very good question. So, of course, nickel cycles are notorious for, if you don't catch it at the right wave, nickel projects sometimes fall off the radar and then they don't start until the next wave. The difference here now is that EV revolution is driving a super cycle of nickel. I mean, it's pretty obvious when you look at what's happening with the LME. It's down to almost nothing. The particular kind of nickel that's at Minago is class 1 nickel. It's a nickel sulphide product, which is something that's required for the batteries in the EV revolution. That's going to continue to drive the nickel demand for a very long time. We don't see anything, reducing that demand. On top of that, this particular project has something unique with its GHG, so greenhouse gas emissions. Because of its location and proximity to the Manitoba hydro power, it's an extraordinarily low GHG. It's the lowest on. You can't really get lower than that, other than if you've got a massive bank of solar panels, and you have to buy them and manufacture them. So this particular project has extraordinarily low GHG, and that will really drive supply chain management for some of the larger manufacturers, because of course environmental and social governance is driving a lot of the companies out there right now. This project will work very well for that and may even supply carbon credits at the end of it. So those are some real interesting factors that are going to drive this project that are different than 2010. It's not a cycle anymore, and it is a green project. Those are the two major pieces.
Great, great. And kind of a general question here about the project. Obviously, a trend in mineral exploration these days is, some of the low-hanging fruit has been mined out, and people are looking for maybe buried deposits. And in this case, that is the kind of discovery that it was. But obviously, that means you do have some pre-strip before accessing the nickel itself. Can you tell us a little more about the specifics of the potential to quarry and potentially sell some of the overlying the material from the overlying rock layers?
Yeah, so one of the interesting things about the 2010 feasibility study is that they had frac sand as part of the revenue generation for the project and an offset for capital. Now, at that point in time, frac sand was in the $40 to $50 a ton range. It's down to the $20 a ton range. We will continue to look at that as an opportunity for a capital offset to get to the actual nickel mine. In addition to that, there is 110 million tons of limestone, and that has an opportunity that we're working with the First Nations groups to collaborate as a revenue sharing project, which will not be profitable, but it will essentially offset capital. And that's part of our role is to develop the market for that so that we can utilize that product over the life of mine and ship it all over the province and utilize that as a capital offset. So our purpose here is that this is a pure nickel play. The project will live as a nickel mine. Limestone sales is an opportunity that we're looking at, and we have to generate the market for it as well as the frac sand. But right now, it's a nickel play, and at $15 a pound nickel, the project looks very good.
Okay, great. And I guess one other question, kind of in the nickel industry, obviously, in this case, you're looking at producing a nickel concentrate. That would be kind of a traditional product that would be sent to a smelter. Some companies are looking at maybe other types of products, some of which might be related to the EV market specifically. Are there any opportunities in that way, or is that more of downstream? You would likely send this to a smelter, and potentially, if this ended up directly in EV vehicles, it would be from there.
So our current output, based on our Environmental Act license, is a 20% concentrate leaving the mine site. Now, can we do something more than that? Absolutely. Now, it depends on who wants the product. So we're in the process of figuring out who's going to buy the concentrate, whether or not it's an off-taker like the Glencores or the Trafigures of the world or the Valets of the world, or it becomes, a car manufacturer who wants the offtake and we send it to wherever their preference is, or we develop an additional process to develop like a nickel sulphide product can be used directly into batteries. That's something that we've yet to understand. And after we get finished the feasibility study, we can look at that. We can't do that right now because it could impact the Environmental Act license.
Right. Okay, great. And then I guess just kind of a general review question, just to review what news might we look forward to from Flying Nickel over the coming weeks and months?
Yeah, good question. So upcoming, what we have is the assays from our initial exploration program on the site, of which we had a couple of metallurgical holes and several exploration holes to help define the current ore body as well as some of the northern limb points. So those assays should be coming out over the next couple of months after we get finished cutting all the core and send them to the assay lab, of course. So that's a key element. We have engaged Scarn and Associates to do the GHG analysis on the project based on what we're doing with the 2010 feasibility study update. We would expect that out over the next 2 or 3 months as well. The feasibility study update, of course, will be finished by the end of November, and that's a really key element to the project. We would also expect, of course, the announcement of the Environmental Act license and the grant in the Flying Nickel name to occur by the end of Q2, early Q3. So those are some pretty big news pieces that we should expect to come out.
We did have one other question that came in. Obviously, this is primarily a nickel project, but are there any other byproducts such as cobalt?
There's very limited cobalt in this particular project. There's some limited amounts of PGMs and precious metals in here that we're looking at figuring out how to, if we can recover those in the current milling process. We'll see what that looks like when we get through with the feasibility study update. It doesn't have a whole lot of cobalt or other, we consider them deleterious elements at the moment because some plants cannot take cobalt. So we're actually quite happy that it doesn't have a lot of cobalt.
Okay, great. Well, I think that's all the questions we have for now, Rob. I'd like to thank Rob again for presenting today. And thank you everyone on the line for tuning in. Just a reminder that Red Cloud Securities will be back tomorrow afternoon when our webinar series continues with Galleon Gold presenting Thursday, May 5th at 2 p.m. Eastern Time. Have a great rest of your day.
Yes, thank you for joining.